Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. And for all the troops and people who are honoring those who have passed on, God bless you. I know that Janos is involved today in leading his group, and so all I want to say is God bless. All right, let's get to the chat line. Let's go there. Head to Dukascopy. I guess you can see the, what can you see? You can see the Swiss this morning. It is doing its thing. It's sitting right on the range now. Just sitting on the range. I mean, it's like, this does not seem to want to stop. This, command and control type of economy situation where things sit on ranges. Basically, it is just what it is. That's where we are. We have these central banks. I don't know how else to describe it. Central banks controlling everything under the sun. It's pretty much the way it goes. And as you can see right there, they're back up to their natural range of where they want to keep this thing. And it's like that with pretty much all these currencies or all these pairs trades, and at times they slip. We see now how the euro has dropped underneath its range. How they decide the range, I don't know, but they do have a decision-making process. That I can guarantee you, they definitely do, because our treasurer defines who is manipulating their currency and who is not. And the only way you could define that is you have to have a formula. And so that is going on. That is exactly what's going on there, and that they define some type of range and characteristic, and before you know it, they trade in those ranges. People get comfortable with those ranges. They know that they can sell it up around this area and buy it down at this area, and normally that's all good. Our math keeps us even more honest in the sense of, we can tell when it doesn't work. Let's use, I think the best one of all is, this was fascinating in the sense of if we Fibonacci this range that we've been following for over a year and a half, I mean, it slips out of it on some level at times. But if we really Fibonacci it, right? I mean, look what it did. It stalled out at the 50 percentile, right there. Bounced between the 0.38 and the 0.62, however you want to calculate it, and then it sent itself back up. And as one trader who's been trading for over 40 years, Robin, maybe 45 years, 46, 47 years he's been trading, he said to me, it's almost like as if they've taken a technical analysis book and started drawing patterns out of them. And it is like that. It really is. You can see the characteristics, the continuity, the consistency. You can see all that. So let's get rid of that. Let's head over to the euro. Take a peek at the euro this morning, because what a classic. It's dropped cleanly through the range that it's stuck with for over a year and a half also. You can see it had issues here playing with the bottom end of it, but it has melted away. So we don't even know in that formula, whatever formula they are using it, and I mean when you say who is they, that is the central banks and the ministers of the Treasury, or in the United States it's the U.S. Treasurer himself, and they obviously have some defined way of reading this and clarifying if it's manipulation or if it's inflation or if it's lack of growth, GDP, or you would have to assume there are the factors that everybody's paying attention to. There must be some GDP, gross domestic product, or PPI, producer price index, or CPI, consumer price index, or you have to also assume, mathematically, it has something to do with volume of the amount of the currency outstanding, right? Because, like volume controls inventory, and, more buyers than sellers drive something up, and more sellers than buyers drive something down. And so there must be these factors that they're looking at, and it's very clarifying, obviously. So you can see here, are we going to see literally the same distance of this range that had been holding for over a year and a half? Are we going to see that drop back down into the 108s? Is that a possibility? I mean, I think that's, in some ways, I think that's where, I think we looked at this 2 days ago and said, where could this really go? I think it was AR asked about that in the webinar, said something like, where could this thing go? And I said, well, phew, I don't know. Let's see the width of the range right now again. We're gonna put it together tightly. Let's see if we can define it. So the distance was 122 basically, down to 116. So that's 6 points. That's where I went and looked back on J4X, right? I went back to here, and I took a look at the euro on a weekly basis, and the 108 area seemed to stick out. Now when we look at it in this particular way, let's see, where is it at? Euro against the dollar, right there. When we look at it in that particular way, that brings us back down to 108 again. So in other words, if this was the distance, the natural distance right here, that they wanted to keep it in, the range which they did for over a year and a half, then maybe the next level is 108. So 108 to 122 is the true natural range again. Maybe that's what it is. And so, I mean, and then I guess if you take 50 percentile from, I guess you could Fibonacci that whole thing from 108 to 122, which is, what is that? That's 14 points. You got to figure 7 down from there is 15, right? So you got to figure that we've broken the 15 already. We're below that. We're at the 113s. So then I guess you take the 22, you take a look at it divided by 3, and now you're looking at basically 15. 22 to 108 is 14, and you break that into divided by 3. So now you're looking at 4.7, something like that. I guess 4.7. So double 4.7, which is 9.2. Subtract 9 from 122 is 13. Where do we find ourselves now? We have a low now of 113.20. So what we've done is a 2/3 move down to that 108. See how we do that? I think I've explained that slow and steady, right? You see, or you see how Doc's little noodle of a brain figures things out. And so that could be, we are now going to bounce around here, probably try to bounce off of that a little bit, which you can see we have done. Didn't think about that yesterday, but now I'm coming to some type of awakening. You can see our math is trying to turn up at the same time. You can see the same thing going on over in J4X right there. And so maybe now what we see is a little bounce. Was it middle-aged said he picked up calls yesterday, and and so he's going to try to ride that up a little bit. And you can see it's up a little bit today with this action going on here. And so maybe what we're going to do is we're going to see some type of move with the euro against the dollar. Maybe it'll come back to the 14-ish area or something like that. Maybe play with that high right there, or maybe 50 percentile of that candle right there, somewhere around in there. And that could be the logic of it all. And then we'll see if it stalls out. And if it starts to make another new low and takes out this low over the next week, then we have to assume that there's great potential for this thing to go to the 108 over the next, say, couple months, you would think. Something like that. Because I don't think anything moves really fast anymore. Look at the... I was going to say, look at the Turkish Lira. Turkish Lira, even on its move, has taken, 9 years? 8 years? Something like that, right? For it to double, and then double again, and double again, and double again. Did it really do that? Let's see, from 1.5 to 3, to 3 to 6, to 6 to 12. Okay, yeah, that's probably where I got my 12.5 in my head. So basically, it has doubled 3 times now. Hey, middle age. Yeah, they probably would go up a little bit, and I wouldn't be surprised if you saw this thing make it to the 14ish area. I think that would be, I would turn it into a binary at that point, or take some profits, one or the other. You know, I would assume that could be, especially if it does it as a spike. Have an offer out there, you know, because you could imagine it could be fleeting. It could be really fast, like boom, and then find yourself sitting in like the 1360 area, and you go, wow, it was like 113.98, and I didn't have an offer out there, you know, that type of thing. Boy, do I have a great floor trading story too today. Got this email around 4 o'clock this morning, Eastern Standard Time, you know, and it's a really great story about traders on the floor from an old trader. I'll bring that up too, but this has become the laboratory right here. This euro, watching the way it broke the trading range, whereas the Swiss went 50 percentile to the trading range, stalled out there, and has gone back up again. So it's really fascinating to watch these products play with their trading ranges, and I try to learn from it. You know. You ready to hear from that story? Well, I think I can actually show you the story too, because it was texted over to me. So I'm going to, let's put that up there, because I found it very fascinating. Oh, I think there's another one out there. He sent me another one. Oh my God. There's another one. Here we go. You're going to love some of this. Let's see what I can put this on. Oh man, you got to see this. This is like stories around the campfire. I mean, honestly, it is a hoot. Let's see, how can I do this? If I go like this, let me go back to there, and I grab that. All right, I don't want to put anybody on the dark web. So let's see. If I go like this and go to compose, and then paste. Okay, and then I can cut this stuff out. You'll see my response too. Okay, and get rid of that. All right, now let's see. We're going to be seeing the second story. Let me put up the first story first, okay? And then let's see. Can we do that? Yeah, I think so. Let's see, what's that do? Let's see. Let's see, put the first story up first. Yeah. Okay, here we go. Here's the first story. So I got this like this morning. It says, on January 1st, Mike would walk around the equity floor and drop off a large list of GTC stock orders with each specialist unit for his uncle Morris. All were far away from the market. Most went unexecuted for a long, long time, years. I kept his list in a folder and inserted a sheet of paper with the trade information whenever he got a fill. I thought transposing the trades onto long-term charts would be something of a great interest to include in a book. Every New Year's Day I gave copies to Joe Tomac. I was another very consistent, very solid market technician on the Philadelphia trading floor. I collected old stock market books written by traders like Old Man Kennedy, which were absolutely fascinating reading. I had maybe 100 lost when we downsized. In other words, he sold them out. They may not have had any real monetary value, but to me they were priceless. And my response was, hell yeah, I miss them just thinking about it. That was my response this morning. Now let's both read this together. Now, this is a response back while I was out, because I just got back in the office here. We're an anachronism. I am much older one. I started in business in 1958. Remember the day New York Stock Exchange volume hit 1 million shares. A block was 1,000 shares. I guess back then. Remember I was saying Rambo was trading blocks of 10,000 shares, and that was a big number back in the 80s. An amazing percentage of orders were odd lots. On the floor, odd lot orders had a circle drawn around the amount, a line drawn under the orders of 1,000 or more. Eisenhower was hospitalized with a heart irregularity in 1959. In order to be released, he had to have a bowel movement. Okay. The day he took a crap, there was a massive rally. Oh my God. The tape ran past 8. Didn't leave the floor until well after 9 o'clock at night. I worked for a good body, one of only 2 firms that would hire Italians, and only in back office positions. Working of the floor was a big promotion. The other was Walston and Company, who began to hire Italians after Walter Ralston. Yeah, he's a legend. Married one of the Guinea girls. Oh my God. That's Vince. All right, now this is coming from a former chairman of one of the exchanges, and I can say that he was actually on the NASDAQ on the committee with, who was the guy that robbed everybody in the hedge fund thing? Madoff. He was actually on a committee with Madoff for years. He knew Madoff and was stunned when he found out that the guy had robbed everybody. But anyway, so this is the type of stuff I get like 3, 4, 5 in the morning from old traders. You know, I get this type of stuff. Because remember, I'm the baby. I'm almost 67 years old, and I'm the baby. They call me the kid still. So anyway, there you go. There's that a little trading memorabilia. Oh my God, that's a goodie. All right. Let's see, where are we at this point? Like the draft. Let's see. Go there. And so there's the trading story. You know, they just fired this stuff out at me at like 3, 4, 5 in the morning. And they hit me 2 in the afternoon, and they come up with, you know, old trading things that are, you know, been going on in their heads, you know. So, all right. Let's see, what's the next thing here? Let's see. Oh, okay. Yeah, so we were trying to figure out the trading range for the euro. That's it. And watching the trading range of the the Swiss is a really classic one at the moment. It's very comfortable with itself. You know, it's staying inside the range. Just traded down 50% of it and then came right back up again. And remember, when it goes up, it's losing money against the dollar. So I would imagine that, you know, that just emphasizes the fact of the inflation. I can't figure it any other way. I appreciate it, Middle Age. It's fun to have people to tell these stories to, because we're a dying breed, and I may be one of the only old heads out there, you know, talking about old stories and marketplace and so forth, that they shouldn't be lost. You know, these stories should be retained. Half the reason I do the webinar is for me to complain about the fact that we're walking away from history all the time, and so you know, it's fun to be able to talk about this stuff. You know, you read it live with, like I did. I mean, that second part. Oh my God. Yeah, he was on Wall Street when to get a job being an Italian was a tough thing, you know. It was really tough. Let's see. All right, now where are we at from there? Let's go over to, where else do we go from here? All right, let's go take a look at the cable. Let's see what's going on with the cable. All right, let's put it up on J4X. And there that is. You can see cable's kind of interesting. It's gaining against the dollar. It's been that way for a couple of days. It's still in a weekly sell, but I'm not. I am. You know, I'm a natural bull in that product, so I'm always surprised when it's not doing something positive. But obviously this has met its bottom of the range. Maybe the real range is 134-ish to 142-ish. Maybe that's what it really is. Remember, this range could last years and be followed for years because the central banks run everything. So I mean, the treasuries of all the countries are running what defines as manipulated or not manipulated. So it's a combination of both of those things, which are, you know, kind of odd in their own right. So there's the cable. You see here it's moving up. You see it on J4X, and you can see it over here on Chicago Quant. You know, it's moving up. It's in a daily buy for 3 days now. Just like you see it in J4X, you see it here, the 3 green bars and the white line and all that. It's moving up. And you can see here the weekly is still not really showing any real buying yet. I guess we're going to have to literally get up to the 50 percentile to get this thing moving. I don't know. We'll see. We will see. All right. From there, we dance our way over to the Turkish Lira. It'll be another surprise. I would imagine it's flat for the day. Just a wild guess, but I would think flat. No, that's the yen. I did that yesterday too. I hit the yen instead of Turkish Lira. There. Oh no! Now they're making another high. Uh-oh. Uh-oh! Heading for the $11 area. So are we going after the 12.5? Are we hitting the 12.5 in the euro? Euro Turkish Lira? Oh my God. We're getting what I thought we were going to see. It's blowing my mind if it is. My mind is blown. It's a 60s thing. Yeah, it's, you know, it's like after dropping acid, they used to say, my mind is blown, man. Blown out. All right, let's see, there it is right there. And, oh yes, we did. We've banged up against the 1250. All right, how about that? Let's get it up on Chicago Quant. Right there. See what the high is today. The high is 1247. Yeah. So that's where I guess my subconscious picked up the doubling and then doubling again and then doubling again. So if you go from 1.5 to 3 and then 3 to 6, then 6 to 12. So I figured they would get a little past the range. So that's why I kept on saying we're going to see between 12 and 12.5. I've been saying that for a while now. I had no idea why I was doing it. It literally I had to have Vince hit me in the head, you know, with his old trading stories. And then I had to start thinking about other things, you know. That's it. I mean, I guess that's where we got the 12.5 out of my subconscious. But it makes sense. Double, double, and double again. So now I surely hope we don't see one more double, which would be 24. We don't want to see 24 to the dollar. Then wow, I don't even know what to say about that. I don't even know what to say. So there's the Turkish Lira against the Euro Turkish Lira. You know, I mean, it's been in that daily buy since the 11. Now we've gone $1.50 higher, 1,500 pips, something like that. And where else are we? You see, we've been in a weekly buy for a while now. Since what's that? October 17th? Is that September 17th? September 17th, right? September 17th, we've been in a weekly buy since the 10 area. So it was a 25% move. That connotes a whistle. Oh my God, 25% move. Yowzer. Blow my mind. My mind is blown. Indeed, indeed. Let's see, what else can we say? And I guess that's about it. What else can we say about anything? I don't know what we can say about anything. Just the fact that we just see this type of action. Okay. All right, from there, we go over to the Canadian. Let's see what's going on with the Canadian this morning. there's the dollar Canadian, kind of moseying along, playing with the upper part of the range. Just a second week now in a weekly buy. We've taken out, finally took out where it went into the weekly buy. We've been above where it went into the daily buy. It became the 50 percentile, which is kind of interesting, and played down to it for a couple of days last week. Or now I guess it's this week. Is that Monday? Yeah, that's Monday. And then Tuesday, then Thursday, then Wednesday, in honor of Vince. Monday, Tuesday, Thursday, Wednesday. Gomazagan. All right, now let's derive ourselves over to, because the way the Canadian is going up in value, normally that means that gold is going down. So let's see what the gold is doing. It looks unched. We got an unched going on there, unchanged. See that? Just kind of trying to hold up strength. Yesterday we did I guess we talked about the 6 reverse head and shoulders we've seen in silver. We'll do that when we go back to the metals complex. But right now we see that the gold is kind of standing around, not doing too much. Played down this morning and is lifting back up. And what else we got going on there? Let's take a look at crude oil. There's deck oil. Went into a sell yesterday. Just kind of unchanged or down a little bit. Going on its second week of a weekly sell, so the pressure is there. Let's check it out on J4X. Right there. Wow. Just moseying on down. Come on down. Look at that. Smackadoodle City. Yeah, Smackadoodle City. I was kind of surprised about it all. We'll look deeper into the energies too. But at the moment, I was surprised to see the contango the way it was. So like the back month is like $5 difference, 6 months out. They're almost discounting by like 80 cents a month. So the June contract, we have a client watching it, and it's kind of interesting. Let's just show you that really quick. Normally I don't do that. I'd like to go finish off the currencies. Why don't I do this? Let's finish off the currencies, the 4 that we do last, and then we'll go back over to the oil sector, or the energy sector, and then we'll go do the metal sector, and we'll just take it from there. Unless anybody has a question. If you have a question, just fire it out. Oh, did you like that? Cool. Yeah. I was told. I was saying to Robin. I was told by somebody. I forget who it was about. I want to say, one of the old traders told me that they know somebody They knew somebody on the Fed desk in New York, and they told who told me. They told them that they were making the main decision of the Federal Reserve's QEing, when they do this QE buying and all that stuff and selling, that they're using technical analysis. They're using like John Murphy's technical analysis book. So that's why everything seems to be following the technical analysis so much more consistently, is because the New York Fed trading desk supposedly is kind of leading. I'm sure they're doing it in other places too, but I'd imagine that they may be the directional. They may be the ones that define the direction. So in other words, they might say, okay, we're buying oil, or we're selling gold, and then they pass it along to the other Fed banks, and then they probably set a range or something like that. We'd like to see a trade between here and there, and so you can sell it when you want to sell it. But I understand that a lot of the trading goes through the New York desk at the New York Federal Reserve, and so there's a little leakage sometimes of information that does make it out to old traders, because we know people that that are involved on a higher up level, and they kind of whisper a few things every so often. That's what I've been told over the years now, since QE started. I've been told this, going into the last 6, 7 years I've been hearing that. So remember, QE is almost 14 years old now? Let's see. This I guess it would be, let's see, Obama went ahead in the polls in like August, September. It was pretty clear he was going to win the election, and everything collapsed, and they had to create QE. So, so you're looking at 2022 will make it 14 years, especially when you go into like the summer, into the election season. So that'll be 14 years of QE. Let's see, what do we got here? Let's take a look at, let's shift this over. Let's take a look at the South African Rand, which I've been kind of mumbling about, in the sense of they must know, something's going on, they know. I've been saying something like that, because the Rand, which I would have thought would have gone down throughout this whole thing, has been only going sideways to up. So that kind of told me that that there was definitely something going on in the banking side of this, marketplace. Where's that at? Rand, right there. Yeah, making more highs. Was that a 6-month high? I don't know. It could be even further out. Look at that. March. Took out the March highs. Let's see if we move that over just a little bit. So November highs. We're going after the November highs now. Is that what it is? And that's why we like to use the J4X when we try to look back like this. Let's go back over to J4X and look. Let's make it a weekly. Right there. It's much more insightful. So we're looking at highs that haven't been in the Rand, South African Rand, since, what is that, November of 2000. So it's a reverse head and shoulders, really, on a weekly basis. So that's not a good sign, is it? I mean, when it comes to the metals complex, we kind of usually think that gold is going up in value when the South African Rand is going down. But in this case here, they seem to be taking it up. So is that an inflationary thing? And so they're discounting the currency? That's what I'm thinking is happening. I think that inflation thing it has to be more appreciated. I know that the ruling party here in the States right now wants to pretend that it doesn't even exist. But we're at 6.2%. Matter of fact, I heard, was it the Atlanta Federal Reserve is classic for predicting the GDP, and they said we could see fourth quarter GDP at 8% and inflation at 8%. So that's what we're seeing there. That's zero. That's considered zero growth when you have inflation at 8% and GDP at 8%. In other words, if inflation was 4%, then you would have growth of 4%. Or let's say it this way: if inflation was 3% and GDP was at 8%, then you would have 5% growth. Okay, so that's where we're at the moment. Let's take a look at the ruble. I'll put that back into a daily, like so. And there's the ruble, kind of still up. It's in a daily buy for a bunch of days here now. I guess like 4 or something like that. 1, 2, 3, 4, 5. This is the 6th day. I'm not sure why it's not reflecting that. We put that line in there yesterday. I hate when it does that. Save workspace. There we are. So there's the ruble. You see that pressure's on. We're in a weekly buy. It just keeps on pressing up. All right. From there we go to the yen. Yeah, the yen is kind of, looks like it's flattened out in here. We are flirting with the weekly seller after all these weeks in a buy. 3, 4, 5, 6, 7, 8, 9. Its 10th week in a buy is starting to fail, and we're breaking down. You know, we broke down here all week long below the time manifold here, and now we are challenging the zero line. And what are we? We're in a daily buy since here, and we're not really seeing that much breakdown on the daily yet. So we'll have to see how that plays itself out. All right, and then last but not least, we jump over to the Mexican peso. Right there. Right there. Now the peso is in a buy since here, and it's kind of just drifting up. And we've jumped through the weekly. You can see that right there. I had that circle in there already. Let's fix that. Like so. And then hit a save. File. Save. Workspace. Oh, we need to put the daily in there too. Like that. Save workspace. Save workspace as. There we go. So the peso is, you know, moving up to its top of this range here. And at the same time, let's jump over to, I think that's it. Oh, okay, that's it. That's the 4 currencies, the last 4 currencies we look at. Now, any trader out there that would care, or listener, or webinar, or whatever you want to call yourselves, I call you traders since you're watching. You know, if you want to see something, just shout it out. We'll go take a look at it. If not, I'll just keep on looking down, you know, the same rhythm I do every day. All right, so now, let's see, where do we go from here? So let's go back over to the energy complex to start off with. And there's the crude oil, and let's do it right there. So there's the deck oil. It's kind of flattened out now since we've been watching it, and you can see it's on a daily sell for just, you know, going on a second day, but it's been in a weekly sell since up in here somewhere, and it threw this hitch in there, and now it's back into it again on a daily basis. And then let's take a look at the June contract right there. And you can see that's trading at 73.47 versus the 77 and 70s area. So that's $4.50 over a 5-month period, right? So let's see, Jan, Feb, March, April, May. Yep. So it's like, you know, 70 some odd cents a month in a contango, cheaper. So you can buy back month oil lower than you can buy front end month. And I guess the cost to carry is really built into it for the risk or something of that nature. Now let's see, where do we go from here? From here we go over to natural gas. And you can see our natural gas has been in a sell since the $6 plus area, that explosion to $33 in Europe. And you can see we've played down from the 6s down into the high 4s. We've gone in and out of, like, that was a nice winner chicken dinner. And this kept you safe from being beat up. And then we went into a buy. You can't take that, of course. You take the sell. You can take that. Now, I'm not sure why that's not reflected anymore, but we'll have to go back and check the data on that. And then it went back into a sell, like right here, and broke down. Actually, I don't know, something, I'm not sure. We'll have to go check some of these numbers out. But the end result is that you can see the pressures on it with that right there. that would be, I guess, the official sell right there. And because of that, the official sell is the opening, not the close. All right, and that's natural gas. Let's go take a look at heating oil. Right there, January heating oil. You can see that's kind of that same explosion up in the, was it the 255 area, has driven it down to the 236 area. So, and we went to the sell in here in the 250-ish area, confirmed it at the 240 area, and have dropped down to the almost the 230, was that 234 area. And that's the oil, the heating oil. All right, so that finishes off the energy sector. Now let's take a look at, we could look at one, yeah, we can look at one other thing. I think this is kind of interesting, and that is bean oil, because they do burn that. There it is, December bean oil. Did the same exact thing, followed the European situation, and slid into a sell up in here in the 62 area, and traded down into the 57 area. Wasn't a sell right from there all the way down to right that point. This thing really does trend nicely. And that's soybean oil itself. And Dukascopy has the soybeans right here. And it's been lifting soybeans. We've been seeing the soybeans lift. We'll just show you real quick. Match up to Dukascopy's. See that strength in there. Playing with the weekly now too. All right, let's jump over to the metals complex again. So there's gold. Now it's backing off again. Let's check out silver. I think there's bad data in there on the silver, because we were in a daily buy last night. How that is like that now, I don't know, because something's changed the data in there. I'll have to go check the data. And then it's showing some weakness in here right there. And then you can see the weekly is very firm. And then from there we go over to, let's see, silver is up. Oh, we go to platinum. Platinum's trying to work its way down a little bit, but the weekly's holding up. So right now the metals complex seems to be firm, if nothing else. Kind of thinking that they're going to do, like the article yesterday, we're thinking that they play around for a while, go sideways, and the next thing you know is they find some life and they make another set of reverse head and shoulders on the upside. And it goes up, I don't know, 26 and change, something like that. Try to get to 26 and a half, maybe 27. Let's put it this way. They are going to go up slow and steady and grudgingly. There's no doubt about it. There is no like, oh yeah, let's run and buy that stuff today and watch it go to 35. I mean, we see the physical market in silver trading at like 37, 38. We see the futures contract trading at under 26. So they're carrying a nice physical discount by some real dramatic number there. I think I have a sip of water. I feel a little parched. That felt good. All right, now let's jump over to, where do we jump over to? We've done the metals and we've done the energies. Let's take a look at the stock indices. So let's start off with let's do the S&P 500, because that seems to be the global index itself. And you can see it's still lifting up, and they're all firm this morning. And let's see right here. There it is right there. You can see, been in a daily buy for a few days here now. Grudgingly moving up. Been in a weekly buy all the way back to the beginning of October. And it does, see, you can't see that. Let's do this again. Right there, all the way back into here. So it's been playing with the weekly buy. and you know, in the first week and a half of October, and now it's kind of still marching along. It's gone from the 4,400-ish area, or 4,500-ish area, to the 46,200 points, which is a big move for that product. Then from there, take a look at the Dow Jones Industrial Average. You see that it's still in a daily sell. Every time it tries to lift up, it fails. It is up for the day, but not a lot. Let's see, where is it at? Right there. It's up 30 points, 31 points at the moment. Whereas the S&P 500 is up 12 points, which is pretty big for it. And let's see, let's put it up on here. Right there. This is the Dow Jones Industrial Average. Also, at the same time, we can take a quick look on a short-term basis. Maybe we'll save that. We'll go do short terms after we'll do intradays after we do these 4 or 3. And then let's take a look at the NASDAQ 100, which is the Tech 100 on J4X. Right there. You see it's tried to do a little correction, and now it's turned up. And there it is right there on the Chicago Quant, holding a nice weekly strength from the, what is that, this 14,750 area to now the 16,400 area. So it's been a heck of a move there on the upside. Hey, Middle Agency, what do we got here? AUD dollar. Sure, let's see what is up with the AUD dollar today. I think it's on the fact check. That's line 12, right? Yeah, right there. So it went into a sell yesterday. I think the weekly's underneath, right? Let's take a look at that. There we are. Yeah, so we're really pressuring this product at the moment. And it's in a daily sell for a couple days here. The second day, that's it, right there. So I went into the sell there. And what else we got brewing here? And who knows, maybe it's going to go challenge this stuff here between the 71 and 72 area. 71, 75, something like that. Let's see how it looks. $71 seem to be a support. And the range seems to be 78. So 71 to 78 maybe? I don't know. Maybe 79? Does seem like that range, doesn't it? Between 70 and 80. What date is that? That is July of 2020. So that's over, what's that? A year and 3 months, 15 months of a range, something like that. We're in November now. So July, August, September, October, November. A year and 5 months. Almost a year and a half, right? How's that on the AUD? Looks like a little pressure at the moment. It's going to sit in the sell and going into the weekly sell. So I guess we could see a couple handles down. Let's just save that. Ta-da! There we are. All right, now where were we? Oh yes, stock indices. And if you see anything else you'd like to look at, just let us know. We'll tune into it. Oh, you didn't see that? I just realized you didn't see that. There you are. So you've got it in a daily sell from here. Been playing in a weekly sell all week long. It seems to trade in a range between 70 and 80 for like the last year and a half. Now, when was it down in the 55s? That was back in 2019, the beginning of the year. Oh, okay, that was the COVID thing. So let's see, that alone probably messed with the range too. So there's your 7 evens traded to the 8 evens on a spike, and now has bounced between there. I wonder what happens when we go like this. We contract that tightly, like so, and try to do this, do a Fibonacci. I wonder if we can do that. If we contract that, no, not that. Let's do this. There we are. Scaling. Screen. There we are. All right, now let's go back and look at 70 to 80 and just take a quick peek of how the Fibonacci sequence has been honored. So what do? I go like, how do I do that? I go with, I'll figure it out in a second here. I just tighten this up. So I go like that. Yeah, there we are. Let's widen it now. We want to do the 80 to 70 fib range. And let's go all the way over to here. Like so. So from here to there. Now let's see how it acted throughout that whole event. And what we'll do is we'll make this much more realistic. So it bounces off of it, hits the points, I guess it would be on the way up, it's a 0.338. Plays with the 4, let's widen it more so you can see it better. Plays with the range again there. Just about hits that there. Finally gets to the 50 percentile, and that becomes the support for about a month and a half. Then it trades up to the, what is that? That's the 0.72, is it? Right there. Banging and hitting the 8, and then falling back to the 0.61, then vacillating back and forth between that. And then it seems to gravitate to the fib sequence on that very well. And you can see there. How's that? That's kind of neat. I think we'll save that. This way we can watch the action of it even more. Alright, so there's the Aussie dollar. Okay. Let's jump. Where did we leave off at? NZD? I'm not sure where we left off at. NQs, NQs. We did that, right? Yeah, I think we did. So now, do we take a look at this stuff on an intraday basis? Did we do the Dow? I don't remember if we did the Dow or not. I think we did. Where's it at? Right there. There's the NQs. Did we do the Dow? I think we did, didn't we? Yeah, it's in the daily sell for it. Doesn't seem to be getting any legs at it at the moment. That's kind of curious. You can see we're actually flirting with a weekly sell at the moment too. That's interesting also. So there's some, yeah, wasn't that's fun, isn't it? You know, middle-aged, I like that. I think that's fun. I enjoy exploring ideas. You can only, it's hard to explore ideas when you have so many ideas. So doing the webinar gives me an opportunity to become focused on, you know, products. Someone asks, I take a look. You know, I mean, it's, you know, it's a smorgasbord. You know, it's like a encyclopedia of information out there. So it takes some effort to dissect it all. All right, from here we go over to. I want to go take a quick look at the intradays just to show you what's going on there, and then I think we're going to start singing from there. So you can see here the S&P 500. You can see it's up only 10 now since we played with it. This is up 75. It was 82 when we first looked at it, and there's the Dow Jones Industrial Average is up 13. So it's not, the fact that this is 10 and this is 13, it should be 100 at least. That's normally the way this works. I usually work 10 to 1. And so that just shows you that the markets are, just chugging along on a sideways action. I think this is all window dressing. I don't really think that they're like rushing in and buying. I don't see that much. That doesn't really catch my eye any other way but that. So, all right, now, what do we title this particular webinar? How about, we talked about some really interesting stuff. Talked about old trading stories, old floor concepts. We can come up with a couple different titles. Anybody have an opinion what we should call this particular webinar? I'll give you a few seconds here. And we'll put a title in. Title. Thursday. Let's see. There we go. I'd like to say that we will call this webinar Old Trading Concepts. That sounds close enough, I guess. Old Trading Concepts in analysis, maybe? Analysis. I'm not sure. Old Trading Concepts in Technicals. How's that? I think that's a good way of looking at it. All right. So, happy trails to you until we meet again, which will be Friday, TGIF. Happy trails to you, to all our trading friends. All right, guys and gals, catch you later. Ta-ta.